Most people enter the financial world with good intentions, but not much guidance. They work hard, save what they can, and still watch prices rise faster than their paychecks. It is not because they are doing anything wrong. It is because the system itself slowly reduces the value of their money through inflation. So in this video, we are taking a calm walk through that reality. We will talk about why inflation forces you to invest, how the stock market actually builds wealth, what Wall Street does not tell beginners, and why assets like crypto, gold, energy, and even global events all shape your financial future. This is a simple guide for anyone who wants clarity, whether you are buying your first stock or planning for the long road ahead. Before we begin, nothing you hear in this video is financial advice. This channel is not sponsored or paid by anyone. Always do your own research and make decisions that fit your situation. If you find this content helpful, do not forget to like, subscribe, and share it with others who want to grow their financial knowledge. Now, let us dive in and keep learning together.
Most people start exploring money with hope, but sometimes they feel a little confused. They work hard and save, yet things seem to get more expensive over time. This happens because of something called inflation, which slowly makes money buy less and less each year. So, let's take a calm walk through the world of money together. This guide is for anyone who wants to understand money better, whether you are learning about your first investment or thinking about digital money for the future. Inflation means that the price of things you buy goes up faster than how much money you earn. Governments sometimes create more money when economies slow down. When to raise more money but the same amount of things to buy, each dollar becomes worth a little less. This is why groceries, rent, and other things get more expensive, and why simply saving money in a bank account doesn't always feel like enough. If you don't invest your money, inflation will slowly make it lose its buying power. But if you do invest, your money has a chance to grow faster than prices rise. For example, a bag of groceries that cost $100 many years ago might cost $150 to $180 today. Many new investors think the stock market is like a casino, but it's actually a place where you can become a tiny owner of real businesses. Over a short time, stock prices can jump up and down because of news or how people feel. Over a medium time, they often follow how well a company makes money. Over a long time, stock prices tend to grow if the businesses themselves grow. Patience is more important than being super smart. If you had put $1,000 into a mix of many different companies many years ago, it would likely have grown much faster than inflation and wages. Sometimes, large financial groups can try to influence prices in the market. They might push prices down to make smaller investors sell, then buy cheaply. They might also make prices go up quickly to get new investors excited, only to sell their shares when others are buying. Or, they use computer programs to create fast up and down movements. These are everyday things that happen. Imagine you buy a share for $50. It drops to $48, and you sell. Then it jumps to $56 right after. That's a classic trick. Digital money like Bitcoin and Ethereum aren't magic. They are special technologies. Bitcoin is like digital gold because to raise only a limited amount and it's very secure. Ethereum is like digital building blocks for new apps and online systems. Both can change value a lot in the short term, but can be very strong for the long term. This is because their supply is limited. More and more people want them, and they aren't controlled by governments printing more money. When traditional money has problems in some places, people sometimes use Bitcoin as a safer place to keep their value instead of local cash. Before stocks or digital money existed, people trusted precious metals like gold and silver. They don't grow like businesses, but they also don't lose value like paper money during inflation. Gold and silver help protect your money's value, even if they don't multiply it. During tough times like recessions or wars, gold often becomes more valuable while other markets might fall. Energy drives everything: factories, transport, heating, and shipping. When geopolitics gets tense, energy prices jump, and so do energy stocks. A single conflict in a major oil region can cause fuel prices to spike within days. For advanced traders, to raise forex, options, and shorting, beginners should not rush here, but they should understand what exists. Forex trading is about trading currencies as economies strengthen or weaken. Options trading involves contracts that let you bet on direction with leverage. Shorting trading means profiting when prices drop, but it's risky if used carelessly. These tools are powerful but dangerous without experience. A wrong options trade can lose 100% even if the stock barely moves. Geopolitics: why the world's conflicts move your money. Elections, wars, sanctions, pandemics, and supply chain issues. They all shake markets. Not because investors panic, but because global trade is connected. When one region struggles, prices everywhere shift. A port shutdown in Asia can raise product costs in Europe and America within weeks. How to actually make money: short, medium, and long term. Avoid gambling. Focus on stable companies and use small, slow, cautious positions. Accept volatility is high. For the medium term, 5 years. Buy during dips. Stick to quality: tech, energy, healthcare, infrastructure. Consider Bitcoin, Ethereum slowly and consistently. For the long-term 5 years, hold great companies. Own some gold. Dollar. Cost average into stocks and crypto. Let compounding do the work. Invest. Don't gamble. Investing $100 monthly for 10 years beats saving $100 monthly for 10 years every time. The path forward: you don't need to predict the future. You only need to understand how money changes, how markets move, and how patience beats panic. Inflation will keep rising. Geopolitics will keep shifting. Wall Street will keep trying to shake you out. But if you stay calm, invest consistently, and choose quality over hype, your wealth grows slowly at first, then all at once. Every expert began as a beginner. Every portfolio began with a single step. Your journey starts exactly where you are.